Welcome back to BullionIQ, the channel where we talk about crypto in a serious, professional way. If you are here for long-term thinking, real analysis, and understanding how money and regulation actually work, then you are in the right place. Today's topic is extremely important for every XRP holder, trader, and investor. What Ripple has just done is not hype, not rumors, and not social media noise. It is a strategic move that could change how XRP is treated by regulators in the United States for years to come. Let me start with a simple question. What if XRP is finally recognized as a payment asset or commodity instead of being treated like a traditional security? What if the regulatory pressure that has followed XRP for years finally starts to fade? This is exactly what today's development is pointing toward. Ripple has sent a formal letter to the SEC's Crypto Task Force. This is not a casual statement. It is an official policy document that clearly explains how digital assets like XRP should be regulated in the future. In very simple terms, Ripple is telling the SEC that crypto cannot be regulated using old rules made for stocks and shares. A company share represents ownership in a business, but a digital asset like XRP is designed to move value, provide liquidity, and act as a bridge between currencies. Treating both in the same way creates confusion, unfair restrictions, and slows innovation. Ripple is asking regulators to adopt a new framework that matches how blockchain technology actually works. This letter is dated January 9, 2026, and it is addressed directly to the SEC's Crypto Task Force. It was written by Ripple's top legal leadership, not by influencers or traders. That means this is part of Ripple's long-term strategy in Washington. They are not just defending themselves anymore, they are actively trying to shape future crypto regulation in the United States. One of the most important points in this letter is that Ripple separates the idea of a transaction from the asset itself. Ripple is saying that even if a token was sold in a way that may look like a security transaction in the beginning, that does not mean the token itself should forever be classified as a security. This is critical for XRP. It means that XRP trading on secondary markets should not automatically fall under strict securities law. In other words, the way a token is used over time matters more than how it was first distributed. Ripple also challenges the current way regulators use decentralization as a legal test. Right now, many regulators think of decentralization as either yes or no. But in reality, decentralization is not a switch. It is a spectrum. Some networks become more decentralized over time. Some start centralized and later open up. Ripple argues that using decentralization as a binary rule creates wrong decisions, where some projects are overregulated and others are underregulated. This hurts innovation and creates uncertainty for the market. Instead of that, Ripple is proposing a fit-for-purpose regulatory approach. That means different rules for different stages of a digital asset's life. For example, if a company is raising money by selling tokens, that transaction can follow security-style disclosure rules. But once the asset is actively traded, used for payments, or acts as liquidity on open markets, it should be regulated more like a commodity or a payment instrument. This is exactly the category Ripple wants XRP to fall into. For XRP holders, this is extremely important. If XRP itself is not treated as a security in everyday trading, it becomes easier for exchanges to list it, for institutions to hold it, and for developers to build products around it. Liquidity improves, legal risk decreases, more companies are willing to integrate XRP into their payment systems. That is how real-world adoption grows. Now let me be clear, this letter does not change the law overnight. XRP is not instantly reclassified tomorrow. But this is how regulation actually evolves. First come policy letters, then discussions, then proposed frameworks, and finally laws and rules. Ripple is positioning itself inside that process. They are not reacting anymore. They are shaping the conversation. Ripple also points out that the United States already has strong laws against fraud, manipulation, and financial crime. These laws can be applied to crypto markets without forcing every digital asset to follow the same rules as public company shares. This supports a system where XRP can trade under commodity-style or spot market regulations with targeted enforcement, instead of being trapped under heavy issuer-style oversight. What does this mean in practical terms? It means less regulatory pressure on XRP trading, easier exchange listings, more liquidity, more institutional confidence, and lower compliance costs for companies that want to build payment solutions using the XRP ledger. Over time, this creates real demand based on utility, not just speculation. This is exactly what we focus on here at BullionIQ. We are not chasing hype. We are studying structure, regulation, adoption, and long-term value. XRP is not designed to be just another speculative token. It is built as a bridge asset for global payments, liquidity management, and cross-border settlement. If regulators finally start treating it according to that function, XRP's role in the financial system becomes much stronger. So today's development is not about short-term price. It is about long-term positioning. Ripple is clearly pushing for XRP to be seen as infrastructure, not as a risky investment contract. That is a major shift in how the market and regulators could view this asset in the coming years. It was a structured policy argument aimed directly at how U.S. regulators define and classify digital assets. Ripple's main objective is clear: to make sure that XRP and similar tokens are not permanently treated as securities when they are being used as tools for payments, liquidity, and settlement. One of the strongest ideas in the letter is what can be called a lifespan approach to digital assets. Ripple explains that a token can have different legal characteristics at different stages of its life. At the very beginning, when a company may sell tokens to raise funds, that transaction could look like a securities offering. But once the network is active and the token is being used for real-world purposes, such as transferring value or providing liquidity, it should no longer be treated the same way. This distinction between the transaction and the asset itself is at the heart of Ripple's argument. For XRP, this point is extremely important. Ripple is saying that even if some early sales of XRP were considered investment contracts, that does not mean XRP itself is always a security. When XRP is traded on exchanges, used by payment providers, or moved across borders for settlement, it is functioning more like a digital commodity or payment instrument. That means it should fall under a different regulatory category, one that allows it to operate efficiently in global markets. Ripple also directly challenges the way regulators use decentralization as a legal test. Many current frameworks ask a simple question: is this network decentralized or not? Ripple argues that this approach is outdated and inaccurate. In reality, decentralization develops over time. A network can become more open, more distributed, and more independent as adoption grows. Treating decentralization as a yes or no rule creates false results. Some projects get restricted even when they are becoming more decentralized, while others avoid oversight even when control is still concentrated. By pointing this out, Ripple is asking regulators to move away from rigid definitions and instead focus on how a digital asset is actually used. Is it being used to move money? Is it providing liquidity? Is it being used by businesses for payments or settlement? These functional questions are more important than simply asking whether a network is fully decentralized on day one. Another key point in the letter is Ripple's support for what they call fit-for-purpose disclosure. Ripple agrees that when a company raises money, investors should receive clear information and protection. But they argue that forcing every digital asset to follow the same disclosure rules as traditional stocks makes no sense. Tokens like XRP do not represent ownership in a company. They do not give voting rights or claims on profits. Applying full equity-style registration to these assets creates unnecessary costs and slows down innovation without improving investor protection. Instead, Ripple proposes that disclosure requirements should match the purpose of the asset. If a token is being used for payments, liquidity, or settlement, then lighter, targeted disclosure should apply. This would still protect users while allowing the technology to develop. For XRP, this means that businesses could use the token without facing the same regulatory burden as if they were issuing company shares. Ripple also reminds regulators that existing laws against fraud, manipulation, and illegal activity already apply to crypto markets. In other words, bad actors can still be punished without classifying every token as a security. This supports a regulatory model where assets like XRP trade under commodity-style or spot market rules, with enforcement focused on misconduct rather than on the asset's existence itself. So, what would this mean in practice if regulators accept even part of Ripple's framework? First, it would reduce the regulatory uncertainty around XRP in the United States. Exchanges would feel more confident listing and supporting XRP. Institutional investors would be more comfortable holding and using it. Payment companies and fintechs would face fewer legal risks when building products on the XRP ledger. All of this increases liquidity, utility, and long-term demand. Second, it would make it easier for Ripple and its partners to expand XRP-based solutions. Right now, many companies hesitate to integrate crypto because they are unsure how regulators will treat the asset. If XRP is recognized as a payment or commodity-type asset, businesses can plan long-term without fear of sudden legal restrictions. This is exactly what large institutions look for before committing capital and infrastructure. It is also important to understand that this letter is not only about XRP. Ripple is speaking on behalf of the broader digital asset market. They are trying to influence how the entire industry is regulated in the United States. But because XRP is one of the most established and widely used digital assets in payments, it stands to benefit greatly if this new framework is adopted. At BullionIQ, we always focus on structure rather than noise. This letter does not guarantee immediate price movement. Markets do not react overnight to policy documents. but from a long-term perspective, this is the kind of development that changes the foundation of an asset's future. Regulation defines who can use a token, where it can be listed, and how much capital can flow into it. That is why this matters far more than daily price fluctuations. What Ripple is doing here is positioning XRP as infrastructure, not as a speculative security. They want regulators to see XRP as a tool for moving value across borders, managing liquidity, and connecting financial systems. If that narrative becomes law, XRP's role in the global financial ecosystem becomes much stronger. Last week, Ripple announced that it received a new electronic money institution license in the European Union. This is different from the UK license we discussed earlier. The EU license, approved by the Luxembourg CSSF, is a big step forward because it allows Ripple to scale its crypto-enabled cross-border payment solutions across Europe. This is not small news. It shows that Ripple is bridging institutional-grade digital asset infrastructure into one of the largest financial regions in the world. With this license, European customers can now access real-time settlements, global on- and off-ramps, and last-mile payouts, all using Ripple's market-leading technology. The VP of Ripple for the UK and Europe, Cassie Craddock, described it as a pivotal step for the region to embrace digital finance, with Ripple powering it all. The EU license joins Ripple's growing global network of over 75 licenses and registrations, which already cover much of the world's financial infrastructure. Ripple claims that these licenses allow them to reach 90% of daily foreign exchange markets, from pilot programs to full commercial scale. This unlocks trillions of dormant capital and positions Ripple as one of the most robust blockchain infrastructures globally. For XRP holders, this shows that Ripple is serious about institutional adoption and large-scale usability. It's not about hype. It's about building a network where real money moves efficiently. Alongside licensing progress, Ripple is also activating key features on the XRP ledger that are crucial for institutional DeFi. One of the most important is permissioned domains. Traditionally, decentralized exchanges on the XRP ledger, known as DEX, allow anyone to trade with anyone. While this is fine for retail users, it's a big barrier for banks and regulated financial institutions because they need to comply with strict KYC and AML rules. The permissioned DEX solves this problem. It allows institutions to set rules so that only approved participants can access certain order books. These permissioned domains essentially create private, compliance-focused environments within the public ledger. This innovation is huge because it bridges the gap between traditional finance and DeFi. Banks, payment providers, and fintech companies can now participate in on-chain trading without breaking regulatory rules. Multiple permissioned DEX can exist on the same ledger, each with its own order books and approved participants. This allows institutions to trade XRP, stablecoins, and other assets safely, while maintaining the transparency and cost efficiency that blockchain offers. The XRP ledger's native DEX has been operating since 2012, so it is a tested and reliable infrastructure. Permissioned domains simply make it accessible for professional regulated use. Ripple's approach to permissioned DEX is closely tied to their vision of institutional DeFi. By combining compliance, scalability, and decentralization, XRP Ledger is positioning itself as a backbone for financial institutions to experiment with on-chain liquidity and settlements. This is exactly the type of infrastructure that can attract major banks and payment providers who have previously stayed on the sidelines due to regulatory uncertainty. It also unlocks new revenue streams for XRP holders because it allows the token to be used in meaningful, high-volume financial activity. In addition to licensing and permissioned DEX, Ripple is working on a product called Direct Remit. This enables users to send money internationally in seconds 24/7 directly from one bank to another. For example, a wire transfer from Kuwait to Jordan can now settle instantly without delays. The system will be expanded to mobile platforms, further increasing access. This is a practical demonstration of XRP's utility. It shows how the token is not just a speculative asset, but a functional bridge for real-world financial transactions. Another important aspect is how XRP complements other networks like Cordra and XDC. XRP acts as a bridge asset for liquidity and settlement, while these other networks bring additional use cases and tokenization. Together, they create a complementary ecosystem where XRP provides speed and efficiency, and other networks provide specialized functions. This shows that Ripple is thinking strategically about how XRP fits into the broader crypto and financial infrastructure. Finally, experts in the community are calling this a wake-up call for the XRP ledger. The technology has been in the background for years, and now is the time to fully realize its potential. XRP needs to move from being known primarily as a payment coin to becoming a widely used network for institutional activity. If permissioned domains, institutional DEX, and cross-border payment tools succeed, 2026 could be the year XRP transitions from a crypto asset to a foundational layer in global finance. At this stage, it is clear that Ripple is building the legal, regulatory, and technical framework needed for large-scale adoption. Licensing in the EU, permission DEX, real-time remittances, and partnerships with banks are all moving XRP toward becoming a usable, settlement-ready asset for both retail and institutional participants. The groundwork is being laid for a new era of adoption that goes beyond speculation and focuses on real utility, liquidity, and integration with traditional financial markets. Talk about the broader implications of Ripple's permissioned DEX and institutional DeFi. By enabling regulated institutions to trade XRP and other assets through permissioned domains, Ripple is effectively creating a bridge between traditional finance and decentralized finance. This is crucial because banks and payment providers cannot participate in a completely open, decentralized exchange. They need identity verification, compliance checks, and risk management. Permissioned DEXs give them that control while keeping all the benefits of blockchain technology, like transparency, efficiency, and cost-effectiveness. This opens the door for real institutional liquidity to enter the XRP ledger, which could significantly increase demand for XRP and reduce circulating supply. Beyond the technical side, Ripple is also actively shaping regulation in the US. The recent letter to the SEC highlights Ripple's efforts to influence how digital assets like XRP are treated under US law. Ripple is pushing for a framework where XRP is classified more like a commodity or payment asset rather than a traditional security. If regulators adopt this approach, it would make secondary trading easier and reduce the legal burden for Ripple and other ecosystem participants. For XRP holders, this is positive because it improves liquidity and makes institutional adoption smoother. The letter also emphasizes fit-for-purpose disclosures for token offerings and the sufficiency of existing anti-fraud and market manipulation laws. This could create a clear, practical framework for XRP to thrive in both institutional and retail markets. At the same time, Ripple is expanding its real-world reach. Their direct remit product, which allows instant cross-border payments, is an example of how XRP is being used to solve actual financial problems. Transactions that used to take days through traditional systems can now settle in seconds. This practical utility complements the technical advancements of permissioned DEX, showing that XRP is not just a speculative asset, but a functional tool for global finance. Institutional participants can now deploy XRP for treasury operations, liquidity management, and cross-border settlement in a fully compliant environment. The integration with other networks like Cordra and XDC also adds to XRP's utility. XRP serves as the bridge asset to settle transactions quickly, while other networks provide additional tokenization and functionality. This complementary relationship strengthens the entire ecosystem, allowing XRP to remain central to global trade and finance. By positioning XRP as the settlement layer for multiple networks, Ripple is effectively ensuring that its token is indispensable in real-world financial operations. Another important development is the emerging narrative within the XRP community. Experts and insiders are calling 2026 a critical year, a turning point for XRP. It is no longer enough to rely on retail speculation or simple payments use cases. The XRP ledger needs to be fully utilized for institutional and cross-border finance to demonstrate its long-term value. Permissioned DEX, regulatory clarity, global licensing, and institutional partnerships all converge to make XRP a settlement-ready, high-demand asset. This transition could drastically increase real-world demand for XRP, creating the foundation for sustained growth beyond price speculation. We also have to consider market psychology. Many passive holders are waiting for Ripple to take action. Meanwhile, Ripple's focus on institutional-grade infrastructure, like permissioned DEX and compliance-focused tools, shows that they are playing a long game. The company is aligning with banks, regulators, and fintech companies to build a system that can operate at scale, safely, and within existing laws. This approach reduces the risk of sudden regulatory crackdowns and increases confidence among both retail and institutional participants. Finally, the combination of technical innovation, regulatory strategy, and real-world utility positions XRP uniquely in the cryptocurrency ecosystem. Other blockchains may focus on DeFi, NFTs, or smart contracts, but Ripple is creating a fully integrated system that combines speed, compliance, liquidity, and cross-border settlement. By enabling banks and institutions to participate safely and efficiently, Ripple is turning XRP into more than just a bridge asset. It is becoming a foundational tool for global finance. This is why permissioned domains, EU licenses, direct remit, and ongoing US regulatory engagement are all so significant. In short, XRP is moving from being a simple payment coin or speculative asset to becoming a fully operational financial infrastructure. The adoption of institutional DeFi, regulatory clarity, and real-world utility are all converging to make XRP a settlement-ready asset with long-term relevance. For holders and participants in the ecosystem, understanding these developments is crucial. We are not just talking about price swings or short-term speculation. We are witnessing the evolution of XRP into a professional-grade financial tool that could reshape how global money moves. Institutional DeFi, regulatory engagement, and global licensing, XRP is evolving into something far bigger than most retail investors realize. It is no longer just a token for fast payments or speculation. Instead, it is becoming a settlement-ready, yield-bearing, compliance-friendly digital asset designed to integrate directly with the global financial system. This is a game changer for both institutional and retail holders because it introduces real utility and sustainable demand beyond mere price movements. Ripple's strategy is multi-layered. On one side, they are engaging regulators like the SEC to define clear frameworks for XRP and similar tokens. By advocating for commodity-style treatment and fit-for-purpose disclosure requirements, Ripple aims to reduce regulatory uncertainty, making it safer for institutions to adopt XRP at scale. At the same time, Ripple is expanding its global presence, securing licenses in the EU and building infrastructure that allows real-time settlement across multiple countries. This combination of regulatory clarity and operational readiness is a major step toward mass adoption. The technical innovations, especially permission DEX, are critical. Banks and financial institutions cannot participate in open DEX due to compliance requirements. Permission domains allow them to trade, lend, and manage liquidity on-chain in a fully regulated environment. This opens XRP to trillions of dollars in institutional capital that were previously untouchable by blockchain, creating a demand dynamic that could significantly affect supply and long-term value. Moreover, permission DEX preserve decentralization while meeting institutional needs, which makes XRP unique in the crypto ecosystem. Real-world products like Direct Remit showcase XRP's practical utility. Instant cross-border payments, 24/7 settlement, and multi-currency support are not theoretical. They are happening now. These applications demonstrate that XRP is more than a speculative asset. It is a tool for global commerce and financial efficiency. When you combine this with the ongoing EU licensing, Ripple is positioning itself as the go-to platform for regulated institutional payments in multiple regions, creating a network effect that strengthens the token's adoption globally. Institutional engagement is also reshaping the market. Banks holding XRP for liquidity, treasury management, or settlement purposes create a hold factor, reducing circulating supply and potentially supporting long-term price stability. Unlike previous years where XRP was mostly used as a bridge for transactions, these institutions are now locking tokens for operational use. This structural shift from transactional XRP to treasury XRP fundamentally changes the dynamics of the market. XRP is no longer just moving money, it is becoming a professional-grade financial instrument. Furthermore, the XRP ledger's architecture is evolving to meet the scale of the global economy. Horizontal scaling through sidechains, upgraded ledger protocols, and compliance-focused infrastructure make it capable of handling massive institutional adoption without sacrificing speed, security, or transparency. This is a critical advantage over other blockchains that still struggle with congestion, scalability, or regulatory integration. Ripple is effectively building the plumbing for a multi-trillion-dollar financial system, ensuring XRP can remain the backbone of settlement for decades to come. In conclusion, everything we have discussed, from Ripple's SEC engagement, permissioned DEX, global licenses, direct remit, and institutional partnerships, points to a single truth. XRP is transforming from a niche crypto asset into a foundational layer of global finance. Retail holders should understand that these are not short-term developments. The infrastructure being built today sets the stage for years of utility, liquidity, and institutional adoption. This is why XRP in 2026 is different from anything we've seen before. It is no longer just a bridge coin. It is a professional-grade, settlement-ready, yield-generating asset capable of supporting the world's largest financial institutions. For anyone holding or considering XRP, the takeaway is simple. Pay attention to the fundamental developments, not just the daily price movements. Ripple is laying the groundwork for long-term structural demand. and the XRP ledger is evolving into a platform that bridges traditional finance and DeFi in a compliant, scalable, and practical way. Those who understand this shift will be better positioned to see the real potential of XRP over the coming years.